Good morning. Welcome to Stock Market Today. It is Thursday, March 11th, 2021, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for that free email. Follow along with the show. Get daily stock ideas to consider upon further research. Hits your inbox every trading day before the market opens. So U.S. equities were mostly higher in calm Wednesday trading, with the Dow rallying to a record close. Most sectors were higher, with energy, materials, financials, and industrials in the lead. Sounds very much like cyclical rotation to me. Consumer discretionary and calm services were relative laggards. Tech was the only sector lower on the day. Treasuries were mostly stronger, and IEF, they're catching that bid. Remember that 114 level we've talked about? Thus far holding. And in particular, it was the belly of the curve. Big $38 billion 10-year auction yesterday. They kind of went off without a hitch. A lot of people were watching that because the recent acceleration higher in rates, which began a couple of weeks ago, the acceleration being the one that began a couple of weeks ago, rates have been moving higher for a while now, was largely a function of a sloppy 7-year auction. So everybody's watching the belly of the curve. So the 10-year going off without a hitch was important. Dollar was weaker on the major crosses. Gold finished up 30 basis points. WTI crude finished up 70 basis points in volatile trading. And as we get to the desk this morning, equities are bid. S&P futures are up 70 basis points. NASDAQ futures are up about 1.7%. That's after Asian markets moved higher overnight, led by China and Hong Kong, up 2% and 1.5% respectively. European markets are higher as well. Treasury stronger across the curve, with the belly once again outperforming. The dollar is little changed versus the yen, lagging on the euro. Gold is up 60 basis points, and WTI crude is up 1.2% to kick us off on Thursday morning. That starts with our base case playing out. Remember what our base case has been. Our base case has been that the trend was waning, right? Strength was waning, but not broken. And our view was that near-term support levels and key support levels were likely to hold and set the stage for the next move higher. That's playing out. S&P 500 tagged the 370 to 380 range and is bouncing. Q's tagged 300, and we're bouncing from there. IWM was the only one that really didn't come close. I mean, it came close to the top end of the 200 to 210 range, but really didn't have much of a downside bias. So we're continuing to watch these levels, but the trend remains up. We've said that, right? And I think it's important. It's a little nuance in the marketplace. You can kind of have an uptrend that's wavering, but not breaking, and that's what happened. And I think we're resuming. My base case has been that we were going to resume. And in my notes to clients, I've been writing that for the past few days. So not much to change here. Where's the relative strength is the next question you should ask. If we agree that the trend is up, the base case is playing out, from there, it's find relative strength, right? That's what we're doing all day, every day, trying to find the pockets of the market that are likely to continue to outperform. And you're seeing it in those cyclicals. The question now is, will tech reassert, or will tech just be going up, but as a laggard? I think that that's an important distinction. Early signs are that it's might be a laggard, but we'll have to watch. Let's take a look at our market in a minute now. Stocks mixed. Qs couldn't hold early gains, right? And that, I think, was important on the day. So now we're seeing early gains again this morning with the NASDAQ up about 1.7%. We'll see if we can hold. I think that that'll be important. Value reasserted its leadership. Go back to the leading sectors yesterday. I mean, it's very much the value cyclical risk reopening rotation trade. All eyes were on the Treasury market yesterday, and that auction was a non-event. I think that that was important. Breadth metrics improve on the week, and as I said, futures point to a higher open today. Major indices, power bar perspective, Dow right? Dow is kind of like I guess if you're looking at the major indices, the Dow is kind of like your proxy for that cyclical value reopening rotation trade. And you could see the outperformance yesterday, more than 1%, 9 to 5 bulls to bears. S&P up 57 bips, still a solid power bar ratio. NAS tried to go yesterday morning and couldn't, faded into the close to actually end the day lower, and still a bearish ratio there, 13 to 23. Small caps outperform on the day, solid. Bonds uptick, and there's energy again. I mean, pound that table. We pounded it on the way down, and we've been pounding it on the way up. Energy up 2.5%, 6-0 bulls to bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes are mixed. Taking a look at our stocks of the day now, sticking with our theme Thursdays, we look at a bearish screen. And, one of the areas that I think is vulnerable just as a function of positioning and size is small cap growth. If the growth trade is going to come off, I think small cap growth could see some pain there. And so we start with that as a universe. Small cap growth is our starting universe. We look for very bearish and bearish stocks that are below their falling long-term trend line with weak money flow and weak relative strength. And we get 19 names that pass the screen. So again, as always, the way I like to think about the bearish screens are, if you own any of these names, question your assumptions, go back, do your work, go back into your research, go back into your analysis, go back into your thesis and see if it still holds. If it doesn't, or if it's weakened, maybe you want to think about taking some off the table. If you trade bearish, if you look for put options to trade the downside, a list like this could be a good starting point for idea gen. And then finally, just, knowing what names to avoid is oftentimes just as important as knowing what names to buy. So I like it for a couple of different ways to think about idea gen or just kind of knowing how to kind of structure your portfolio. But in particular, should always be looking for things that make you question your thesis, right? Presumably you own a stock, you have a thesis, you say to yourself, you have your reasons for owning it. And then from there, you should always be questioning it. Are your reasons still valid? If they are, great. Stick with it. Manage your risk. But, if a screen like this gets you to question your assumptions, I think that's great. That's a useful tool. Let's hit our sector tracker now. Moving to the major sectors over the last 5 days of trading. All green, so that we like. If we're bullish and we think the base case is that the uptrend is going to continue, we certainly want to see an all bullish screen here. So far, so good. Check that box. Energy at the top of the list. We've been talking about that for a while. Utilities and staples being in the top 4, not the best look. Let's be mindful. Let's be honest. Not the best look on earth, but okay. It is. We'll deal with that as it comes. Fins round out the top 5. REITs, industrials, discretionary, middle of the road. Comms, healthcare, tech, bottom of the list. In an ideal world, we see utilities and staples move down this list. In an ideal world, everything is green with utilities, staples, and REITs at the bottom of the list. That's the ideal world. That is, everything's going up, but your defensive groups are lagging. That would be ideal. We're not there yet, so we get there from time to time, but we aren't there right now. So all green is a great starting point. So let's run from there and move over to our industry and focus today. Innovative tech services. Past 6 months, been an outperformer, 21%, 21.5% really. But the ratio has turned weak here in the near term, 42-7 bears to bulls, and ranks at the bottom of the list, 21 of 21 subsectors. Indicative stocks there, Coupa Team, Coupa Software, COUP, Atlassian, TEAM, the ticker symbol there, and Zscaler, ZS, the ticker symbol there, all with very bearish ratings. And you can see what's happening here. And I think this is important because this looks very much like the Qs. And it looks very much like large cap growth. So just be mindful of the factor bets you're making. Steady uptrend has broken below the trend line. So trend is weak and starting to underperform. So if we looked at the Qs, very similar look. If we looked at IWF, large cap growth, very similar look. Now money flow is bullish, but waning. So just want to kind of be mindful of what's happening in the marketplace. And this is what I'm talking about. Can you conceive a world? Can you conceive a market environment that's bullish from a trend perspective with tech lagging? It could happen, right? Tech could go up, but just not go up as much as the rest of the market. That's possible. Wouldn't be the worst thing on earth. We'll have to watch and see. It's an interesting dynamic at play. Let's look at what's trending now. Yesterday's movers and shakers are gainers and losers. Franklin Resources, Ben. Update on AUM numbers, sent that stock higher nearly 10%. Boeing, nothing company specific, up 6.5% there. VLO goes along for the ride with energy. If you're not following along in the energy space by now, use it as a learning opportunity. Mosaic, part of the ag trade. Remember these guys, seeds, fertilizers, things of that nature, chemicals within that space. Mosaic, 5.8% to the good. HWM, we don't rate it. Up over 5.5%. Nothing company specific there. Loser side of the board, GE caught a downgraded OpCo, took 5.5% out of that stock. Hologic and PerkinElmer, HOLX and PKI, both down in sympathy with QDEL, which made comments at the Barclays Healthcare conference that COVID test demand has been declining. So the test stocks getting hit. Lam Research, nothing company specific. Same with Micron, nothing company specific there. Both stocks down about 4.5% on the day. Diving into the chart. It's better breadth this week, and AD line at new highs. All right, so starting as we always do from a long-term trend perspective, percentage of stocks above their 200-day moving average in the S&P back over 80. Anything over 60 is a healthy majority, so over 80 is obviously solid. Rebounding over the past week. Intermediate term, same story, rebound. Actually, we got below 60 on the percentage of stocks above their 50-day moving average. We did that last week. And now we've rebounded. We're back over 70, actually, so that's solid. The AD line, new highs, and the AD line making new highs often precedes the index doing the same. So I'm looking for SPY to make new highs. So we have a data point here that supports our case, our base case. And that's how you build a thesis. And that's how you see if your thesis is panning out. So we're continuing to watch that. Short term also improved the percentage of stocks above their 20-day moving average, moving higher as well and back to a healthy majority. So breadth continues to confirm an uptrend off the March lows. Financials are more than banks. We've been talking about financials for a while, and I think a lot of people always, when they hear financials, they think banks, but financials are much more than banks. We have broker-dealers, securities exchanges, we have insurance in there. A lot of different ways to slice the financial sector, but check out the broker-dealers. New highs yesterday. Guess if you really wanted to make an argument, you could say we're extended above the 200-day moving average, and we're overbought on the RSI. The relative strength at the bottom of this chart, however, new high, right at new highs. For relative strength. So, just another bullish data point within the fin space. It's more than just banks. A lot of different pockets of financials are performing well. And always when I see a nice trend, it's always nice to see that the ETF power gauge rating here at Chaikin Analytics lines up as well. Bullish ETF rating for IAI. So if I'm thinking about idea generation, I'm probably drilling down on this fund's holdings and looking for compelling opportunities. Finally, we've also have new highs in metals and mining, right? So, I know everybody was, dumping on the inflation thesis yesterday because the CPI number didn't show much in the way of inflation. But if you look in the asset markets and if you look in the commodity markets, how long have we been pounding the table on commodities? The message seems to be there. And maybe it shows up, maybe it doesn't. I still think it will. But take a look at XME, new highs on both an absolute and relative basis. It's a metals and mining ETF in a solid uptrend and breaking top side of a consolidation. That'll wrap us for a Thursday. I'll see you tomorrow.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.